Every investment class is prone to some form of market volatility that includes real estate. But in the face of global economic uncertainty and cooling real estate trends, how do you weigh your risks and reduce impact? Joining us to break it down is Peter Sashecki from Everything Financial. Hey, Peter, good to see you.
Good morning.
Thanks for making it in. I know it's wet out there on the roads. Yeah, no kidding. Okay, so the question is, we're asking, what's the difference between market volatility and real estate volatility?
There really isn't much of a difference, Carrie. I mean, the real difference is market volatility, TSX, Dow Jones, S&P, all that stuff. There's segments on the news every day. It's in your face every day with, I think, 87 channels devoted to what's going on in the market. But your real estate, your house, or general real estate is the same thing. It's still subject to volatility. It's still subject to ups and downs. And where the issue comes, of course, is if you're depending on the value of that house as part of retirement. But the volatility is still there. Not as quick trend changes. Your house doesn't go up 20% or down 20% in a day, but there's still market volatility in real estate.
So how do you prevent all of that ups and downs and volatility from damaging portfolios?
Really, the key is having a definite timeline for when you want to retire, for starters, and then looking at reducing your volatility when you get into 3 or 4 years within that time of retirement, or that time when you're going to need the money if it's for something else. Because generally, the market only takes about 3 years to cover. Even if we look at the 08 economic world financial crisis, within 3 years, the market was pretty well back. In 2000, big crisis. Within 3 years, the market was pretty well back. Real estate's roughly the same thing. It's 3 to 5. But if you get a bad real estate crisis, the prices tend to bounce back within that 3 to 5 year time. So you reduce volatility or reduce your risk in your portfolio when you get within 3 to 5 years of needing the money.
Okay, so let's talk about people who do have their retirement tied up in their home. I think there's a lot of people, they own their home, or maybe they're whittling away at that mortgage, but that's the big plan for them, is to have that home, and the value of that is their retirement plan. What is your advice?
Well, we talked about this, I think, about a month ago or something in one of our segments, about the stresses in retirement or the stresses in life, and moving is one of those big stresses. You should not have the home sale on the day you retire. It should be 5 years before, and then get yourself resituated, get used to the new surroundings, get used to you and your partner maybe in a smaller confined space, or get that house sale planned maybe 5 years after retirement. Doing the move at the same time, or roughly the same time you lose a job, which is retirement, is a recipe for mental stress, disaster, financial. It just isn't the right time. So again, you're giving yourself that 5 year window. So if there's a big boom in the market, and we have those here at weird times, and they last 6 months to a year, but you're 4 or 5 years from retirement, don't think, I'm not ready to retire yet, I'm gonna wait. Maybe that's the time to sell. Maybe you rent for a while until prices adjust again, but don't wait and think you're gonna get the perfect day of selling within a few months of retirement, because that's just not how life works.
It's better to do it and plan ahead for it.
Absolutely.
Within that window.
And don't make the house just part of the retirement. It can be a little bonus part. Maybe the sale helps with holiday funds or stuff, but have a better plan where there's actual money there that you know is safe, secure, and you can count on it for retirement.
Is it too late if you're already inching closer to retirement and your house is your plan?
It's never too late. It's never too late to go through a plan and see what the situation is, and then make adjustments and come up with a strategy.
Peter Sashecki, Everything Financial. Good advice.
Thank you.
Calming people's nerves.
I'm trying.
Yeah, thanks for joining us this morning.